Hey, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not an investment advice. So this video is another trade school high frequency trading explanation and example video. Yes, we have weekend, you see the assets are closed. Yes, and so I do not have the possibility to show you some live tradings on OTC market. So I will discuss with you those trades which I have already done, and because I'm doing really fast high frequency trading is really fast trades in a few minutes. Yes, and in this time I don't have the time to explain each and every detail about my trade. Yes, I enter there, and also that would interrupt my flow, my trading flow, if I would get almost in every detail, and that's the reason why I'm doing this kind of trade school videos. And okay, but everything what I'm explaining in this trade school videos is based on those things which I have explained in my ebook. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option, turbo trading concepts, market conditions, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook, it's for free. You'll find the link in the description, and in the description you will find not only the link to the Facebook to the ebook, also to the Facebook group. Important is that you understand that downloading this ebook doesn't make you a good trader. Yes, you have to study those things, you have to watch the related videos to cover those things, and also do this in practice. That means you have to apply those things to your trading style on practice account. Yes, because only having this ebook on your desktop or on your hard disk doesn't make you a good trader. Yes, I have also a lot of ebooks there. Yes, but they didn't make me a good trader. Most of them are useless. So okay, that was this about the ebook. Get this ebook. Yes, it's free. So, and in the description you find also the a link to the Facebook group. Join the Facebook group. Don't miss it. So okay. And let's start now to talk about this kind of trades which I have done here. So let me get first of all the video. We have this here, yes, and yes, and I will first of all discuss with you, yes, before I'm gonna show you this. Wait, I have to. So wait. So yes, I have to discuss with you first of all what's happening here. Yes, because it's important to understand the market condition here. So okay, first of all, always before you're gonna do your trades, you have to discuss, you have to understand the market condition. Yes, and I will show you how to do this. So first of all, you see here we got here a Bollinger squeeze. Yes, then we got a short consolidation area, and then we got a breakout. Yes, this is a breakout, a Bollinger Band breakout. Yes, and then we got here another consolidation area around the 100 EMA. Yes, now price is ranging around this. This is what I have shown you in my ebook, where I have discussed with you the EMAs. Yes, price is ranging around the EMAs. Yes, mostly you can see here in between we have the 100. You can do the calculation. The halfway between the 100 and the 200 is the 150. So price is not ranging between the 100 and the 200. Price is ranging, sorry, and in the consolidation area between the 100 and the 155. That is 55. The 150. Yes, that is this kind of area here. Yes, so that is what you have to understand. And between the 50 and the 100, you have the 75. Yes, that is only a little bit math. You have to get the halfway. Yes, and then you understand that price would here, if you would apply here the 75 EMA, you would see that price would be in a channel between the 20, yes, and the 75, and after this in the range between the 50 and the 75, yes, and then we would get a breakout of the 75, and then we're heading down to this. Okay, so that is this. the EMAs here, you see the 20 EMAs healing down. That is the most important because that is one of the most fastest we have. Yes, this 20 EMA is that what shows you the trend. But you have to understand that it's a lagging indicator, and that means if she is, or if the 20 EMA is showing you a downtrend, it can be also always over. Yes, it doesn't mean that you have yet now a downtrend and you can still do puts. Yes, you have to understand that this is a lagging indicator. It calculates the last 20 candlesticks. That means that is this, how steep this is going down is based on the last 20 candlesticks. So, okay, that is only the basics. So, and now let's start. We have here a downtrend. Yes, we got here a breakout of the 75. First of all, a breakout of the 50, then the 75, then the 100, and now we are here pushing against the 150. Yes, that is all, and also this round number here. And yes, and that is what you should know. Yes, and the overall trend is down. Yes, because you see here also the Bollinger Band is heating down. Yes, everything is heating down. So we are here in a downtrend. Then also here between the 1 deviation and the 2 deviation, that means almost a nice downtrend. Yes, here if we are in this area, but you have to see we have here consolidation areas at key levels. Yes, 50 EMA, 20 EMA, 100 EMA, yes, and so we would have, or maybe also a consolidation area at 200 EMA. That would be most probably, yes, but I don't know. So okay, let's see what's happening now. So I have seen here this kind of engulfing candle, yes, this engulfing candle with this wick, which is showing huge selling pressure, yes, because this engulfing candle alone is not telling a lot, yes, but because we have here this rejection from the 20 EMA, and that rejection from the 20 EMA and closing below the 50 EMA is telling already that the downtrend is still active. Yes, that is what's about. Yes, and then we get this this engulfing candle. Yes, at this key level here, another round number. You see this one here. Yes, and what I have told you in my live trading example videos about support and resistance. If you get an engulfing candle at key level, you can most probably expect that price will break through this area. Yes, why else would there be an engulfing candle? Yes, if price would reject from it. So that is and also if you have price action on the left, you can expect much more that this area will be broken. Yes, so okay, let me see what I have done here. So I will do put put. So I want to say play. So you see price is going up. Yes, that is how you have to trade the engulfing candle. I have explained this exactly in the ebook. You wait till price gets above this level, and then on the rejection from this level, you enter into a put. Yes, that would be what you should done if you are not experienced. Yes, and I entered immediately because I understood immediately that price would go down further because of this kind of wick here, like I have explained, that is showing huge selling pressure. This rejection from the 20 EMA is telling me that the downtrend is still active. We get a pullback here. That is what I explained from the 1 deviation Bollinger Band, and then you can expect that the next candle will be a red one. Yes, it will go down because of this kind of context. Yes, and this engulfing candle. So let me see. After this, yes, we broke through the 200 EMA. Yes, this is a huge bearish candle. Yes, and important is here that yes, that we broke the 200 EMA with determination. Yes, it is really strong down to, and no lower wick. We have here no lower wick, which is showing in general, yes, that we have here no buying pressure. Yes, this no wick here is showing me no buying pressure. Yes, and that is another reason, yes, to enter into, because we have here also the 20 EMA, which is going to cross the 100 EMA, which is also a nice signal, yes, that a price would probably going down till it will cross. It could also not cross because, like I told you, it's a lagging indicator, yes, but this everything here is telling still that we are here into a downtrend. Yes, also if the candle is going up, but on the rejection from the 200 EMA, there would be another opportunity to do a put here because the trend is still downwards. Yes, if the EMAs would be a little bit more flat, yes, it would be much more sure. Yes, but also in this case, yes, because everything is healing down, yes, and we got a lot of consolidation areas here in between, and this engulfing candle, yes, and this huge candle, I would expect that price would go down further. So let's see what's happened. Yes, and I entered on the rejection, yes, from this level into a trend continuation, yes, because I understood from the market that the price would go down further because of the context, which is telling everything. Yes, we got here an engulfing candle, then we got a nice, I would say, rocket candle-like. Yes, it's a. You see here, we have here a rejection from the 100 EMA. This rejection here, this wick at the 100 EMA, yes, is telling that the downtrend is still active. If you have such kind of references, like here, you see that this candle touched the 20 EMA and closed below the 50. This is also a nice continuation thing. Yes, you understand there that price will go down further because the trend is not over. So, and you see its market is doing a lot of panic here, but at the end, yes, let me see. Yes, at the end, this was in the money because of the power of this downtrend here. Yes, that downtrend was so imminent, yes, that it got down. But after this here, yes, because now this area here should be some kind of strong support level, yes, because like I have explained so often, this wick here, yes, is telling not that we have selling pressure, because those one who do not understand candlestick analysis would say, yes, that is a pin bar, it's a clear put the next candle, yes, but those one who are experienced know that if price is going to cross the 200 EMA, at this level, mostly price tries always to range around the 200 EMA. And that is what this is about. Yes, we got here an area here. This is a support level. And on the rejection on this level, yes, I should do a call in this kind of situation. Yes, only because we crossed the 200 EMA. This is not a trend continuation candle. Yes, this is showing here with a lower wick and the rejection from this closed round number that we have here buyers who jumped in. Yes, this candle already is green, but let me see what when I did enter. I wait, yes, to understand, and then I entered into this trade. I got a really bad entry point, yes, to be honest. But this week, why? Because this week is so long, yes. If this week would be shorter, only the halfway, for example, only to this level here, yes, then this would be for sure out of the money, because at the end price almost retraced back to the entry point, yes, back to the opening price of the candle. If you are so close to any kind of support and resistance area, and the 200 EMA is nothing else than a support and resistance area, and that is what you should know. If this wick would have been a little bit shorter, only the halfway, yes, here this halfway here to this level, this trade would have been gone most probably out of the money, because this candle would have been closed below this level, yes. But this long wick here showed me, yes, that price will break back, because this is a fake breakout. Watch my videos about fake breakout, deep explanation video. Yes, there you get an understanding about how fake breakouts could look like. Yes, and that was nothing else like this. And maybe price would start ranging around it or doing a consolidation area now, depending on the trends. Yes, how strange the trend is. So okay, that was already. If you like this video, do a like. If you didn't subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.